good evening, all. Ira Epstein, and here we are for Monday, December 29th, 2025, with your financial market wrap-up. And what a day it has been. Metal markets have been literally on a tear to the upside until last night when I did the weekly update. They were still up dramatically, and then everything let loose by the time you got into the morning session. Big volume day, a wipeout in many sense of the market, and we certainly have put in for the near term probably a trade top. On rallies, people that don't want to stay long, we'll probably use them to liquidate positions for a bit. I don't know about the new buying at this point in time, but I can tell you somebody like me walks away from that volatility. And I had told you to do that very frankly over the past several days, and it's been proven to be pretty good advice at this point. In the other markets, we're looking at the energies down a little bit, and the stock market gave something up. So we'll look at all that in just a minute. In terms of news, you're going to get the retail sales, the red book ones, for the weekend of December 20th at 7:55 in the morning. We'll get the Case-Shiller 20 metro area home prices for October. Now, by the way this is, it's really 8 weeks old. You can see that they're looking for it up 1.4%. year over year, but down 0.5% month over month. And what's happening is the month over month numbers are starting to fall and build on each other, and they're dragging down the year over year. The weighting will take that down. The Chicago Business Barometer, the ISM Business Survey of Chicago PMI, will come out, I think it's around 8:45, and they're looking for a 40 reading, a little improvement for the prior month's 36.3. And then we'll get the FOMC minutes at 1 o'clock, give us an idea what the members say. I think you're going to see that a lot of people want to hold off on another cut right away. They want to get the data, they miss data. As you know, they want to get the data complete. There's questions about missing 1 month worth of data and letting more data come in to smooth that out. So if we could, let's just go right to the chart action. As you can see, for the week, you're down 0.39%. So as bad as it might seem that the stock market was down today, for the week, it wasn't down very much, and it's coming off a week on a closing basis that was an all-time high. When we step over and look at the bar chart, you can see that you just got up and challenging old highs. The high on this week, Friday, was 69.95. This high, as you can see, was 69.88. So you made a higher high through here, and then the lower lows were made into that. Okay, so the market can afford a small pullback. When we look at the swing line study, you're breaking back right now. Where the support comes in is 69.15, about 37 points lower, the 18-day average. I'm not saying it has to go there, but I am saying that's the logical first support area. And the market was unable to make it up to the Bollinger Band top on this rally, even though it made the highest high that it's recently made. So the Santa Claus rally, as I see it, is still very much underway. You had a day setback. You can get a couple of days setback. You have until this running until the end of business on the 3rd. In the March mini S&P, looking at where the index is here on the slow stochastics, you're overbought. So you have an overbought market that's doing a few correction things, could fall back to 69.15.75, and I see resistance up here at the Bollinger Band at 70.21, let's call it 50. Let's round. In the Nasdaq, you've already pulled back to the 18-day average, so the market now can decide what does it want to do as it grows up. If the market on this break cannot take out 25,608.50, well, that's a pretty good sign that the bulls are going to keep control of the market, and then the next move up and away, if it can do this over 25,935 even, will be like a jet boost, and you could lift the market towards that upper band. At least that's the theory. Are we overbought? The market just got itself under 70 readings, which means the market's worked off an overbought condition, but it can re-enter it because being in the high 69 level isn't getting away from a 70 reading. The Dow has gotten further away. 65 readings and 66 are nowhere near a 70 reading, and this market's still the strongest. It's got the higher lows, but it has lower highs now. It needs to start clearing this high right here, 49,000. 085. And if it can do that, then you open the door up for the upper Bollinger Band. I mention the upper Bollinger Band continually here because it is typical at this time of year for the market to try to rally. In fact, whether Yale Hirsch's theory, which ends on the 3rd of January, comes true or not remains to be seen. But there's a strong seasonal into February that often plays out. First part of the year, people look at, and they look at hard. And, from what I can see, our economy is doing pretty good. The weakness of the market has been in the Russell. It has pulled back. It is trying to rally a little tonight, but it's got to get itself up and over 25.67.90 in order to prove to me, at least, that's 31 points from here roughly, that it doesn't have any downside potential. Right now, the bears are in control of that. In the DAX, the market had a one-day pullback with what we did, but here's the most important thing to me. The market has an embedded reading. It's when the K, which is the red number, and the D of slow stochastics are going sideways over 80 for several sessions or more. And when that occurs, it's said to be embedded. Until the red line closes under 79, I expect to see buyers on breaks. In the 10-year note, we're back up to the resistance point of the 100-day average in green and the upper Bollinger Band. And the 2-year note, as you can see, is above those numbers. Neither are really in ideal situations. You have a higher high and lower low, so it's a bounce in a market that's all over the board. In the dollar index, we have an oversold market. That's first. Number 2, you're void of a trend. Yes, you've come down for new lows, and we have downside bias and have had this since back here. Ever since right here on November 25th, the bias has been down, but we're not getting any pattern recently of like we had here with lower highs and lower lows. Instead, you had that rally where you broke the downtrend, then you fell back under the 100-day average, and you're staying under it. The market is looking for a trend right now, and as it looks for a trend, so is the eurocurrency. Doesn't mean the market didn't come up this just last week and challenge these most recent highs. But in terms of a chart, take the name off of it. You have an overbought market. You have a higher high and a lower low. You have a market that is caught between Bollinger Bands and these key moving averages, and it's not the best place to be. In the Japanese yen, the big question is, do you sell short now at 64.63, or do you wrap up your trading and say, I don't think I want to trade over the New Year's holiday, and we'll see what we do? Because the trend has been down, but suddenly with today, you've got lower highs but higher lows. It's probably a good place to just walk away from. In Bitcoin, the January contract, you're staying consistently under the 18-day average of closes, which means the bias is down. Momentum is down, but very oversold. If the market could clear this high of 90,990, it could be a sign the market wants to rally back to the upper band, but it hasn't been able to do that. In the energy market, this was a bounce off a big break in the market that got up and went to the 18-day average, and it's fighting a battle basically there for whatever the next direction is going to be. I could say the same thing of the WTI crude. When I look at the heating oil market, if this market gets itself underneath this break low again of 21, let me put it this way, 211.43, that will give you the lower highs, lower lows with the embedded reading, and you open the door for the 204.65 level. In the natural gas, this was a bear market rally as I see it into the objective of the 18-day average, what I predicted when the market lost its bearish embedded reading, and this should be where the market runs out of its upside momentum. That's how I'm reading the chart. Not looking for a big up move from here at all, and I think the pros will probably be selling out. So you got to make up your mind on a few things now. What do you do going into the end of the year? How do you work with it? And that's the big question. What I know is a lot of traders use TradingView, and I don't know if you're aware of it, but we put a suite of indicators together in TradingView for you to use. Different window envelopes that I use, the slow stochastics with my formula, not the traditional formula. It's very different than the one that you're probably using. outside days are so important that we label them for you, and you could turn the labeling off. But I find that it's really important on the charts to do this. It pairs itself with my morning subscriber videos. If you're a morning subscriber, I think you'll see it ties all together, and with the different charting courses that I have. So everything will match up, and I think that's what you want to learn from to see how that comes together. You have multi-configuration options that you can work with it. It's all done from our website at iraepstein.com in the customer service area, and it only takes up 2 slots. You go in, you sign up in the customer service area there. We will have an email that tells us that you've signed up, and from there we turn the indicator on for you, and from there what takes place is you're able to just work with it at that point in time. We'll send you an email, log out, back in, and it's operational. Again, iraepstein.com, customer service. You have a good day.